What is up, everybody? Logan here again today with another video coming right at you guys. And I've shifted some of my 0 DTEs towards 1 DTEs as of lately, just because the VIX has been so low. And if we go take a look at the VIX in general, we're at these 6-month lows. And with the 6-month lows, like you just don't find very much premium. And especially when you're in a bear market, this is sort of when the turnarounds like to happen, right? Where like since the VIX is generally inverse the S&P, this is when we would just start to leg down again. No, I don't chart on Google. This is just for you guys so you can have a visual representation. But even if we look at SPX stock today, I've been taking a more 1DT approach, and it's just simply with the VIX being lower, but also, just having that overnight risk on for one night. You're not going very far into the future. It's not like I'm doing a 7 DTE, where the market can continue to run away from me. So I think that's one big thing that comes down to how you trade these. And I've just been trading them on SPX. But if we go to like what my 0 DTE checklist is, which is that expected move math, right out of the gate, and we hop over here, look at how low the EM is. Like when the expected move's 32 points, that's just not a lot of wiggle room. And anytime I got caught in rolls, it was when the EM was low, I was in a put credit spread, and then it starts to expand, right, as the market drops because the volatility increases. So that's one thing. And we've been using this chart quite a bit over the past few days, even with the 1 DTEs, because you just get a good feel of our levels, right? Like this is the whole thing when I was mentioning in the Discord was, you have these price levels, and 4,000 is the big level right now. So you have this chop zone from 39.80 to 4,000, and you have this chop zone from 4,000 to 40.20. If that gets broken, right, expect 40.25, which is only 5 points off to the upside. But if 39.80 gets broken, expect like a little landslide. Well, what did we get today right when 39.80 was broken? It bounced once and then just sliced right through it, and it's pretty much been nonstop selling all day. And we are seeing, it does seem that we are curling up a little bit, but let me refresh this. Oh, okay, we actually legged down further. We're now at 39.40. So this thing is still dripping, but I did mention that in the Discord, and I'm not even somebody to predict price. That is not my job. Generally, these set us up to either move over 40.20, and if we see the momentum continue and push us to about 40.45, as that's the next level after 40.25. And this is basically the bottom side of the chop zone where it'd roll over again at 39.70. And that's basically what we're seeing here. Like I mentioned earlier, right? We're down 30 points from that zone, actually 40 from 39.80 once that was broken. And now we're actually seeing the VIX continue up. Now 20 is a really solid level for the VIX. 20 is generally where the market starts to fall back down in a bear market. But if you break under 20 and close and stay under 20, that is technically when we do start coming back into more of a bullish development with the markets, because that's generally what the market's done. Like throughout history is kept a low VIX and just slowly inched up every day, right? Because there's no fear. So what's the point of stopping business development if there's no fear, right? There's no reason to. So that's one thing we've just seen historically. And back to the 0 DT checklist with the gap up or gap down, this actually helped us today. We did gap up overnight, and it wasn't a very big gap up, and our 1 DT had already kind of taken care of itself with that overnight theta, which was nice. And that was down to about 20 cents. We got a fill for 40. And what I did from there was I actually went to this trade. And today's trade, we actually rolled. So what we filled yesterday at around 3 p.m. was just 1 DT for 40 cents. And we were actually able to roll this down for another 20-cent credit on top of it. So we walked away with 60 cents, and then the selling started to happen, which was nice, right? We have all this resistance above us, right? We were still staying in that chop zone. And then we really started selling off, which is not good for the bulls. They definitely seem to be more belly up right now, but also, like I said, it's not my job to predict where the market's going. I just react to price. That's it. I don't try to guess with naked puts and calls. I don't think, if, it's never going to hit this level, it's never going to do this, or it is going to do this. Like, and if you just put your ego aside, it's a lot easier to just really make good, rational decisions with your money. So was my whole goal with like the couple of trades we've had. And I'm not done with 0 DTEs. I just found like this specific week, and with it being a short week with low volume because of MLK Day, I think with a lot of this short weeks we've had over the last few holiday weeks. These short weeks are just weeks where you can get trapped in credit spreads, and it's just something you don't want to have happen to you. So that was kind of my trade thesis. And just looking over like where we are in the long term too, right? Like we have had basically rallied for the last 2 weeks straight, right? Just green, 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 green over and over. And we're back up to like this resistance zone and back around that 4,000 level. So just staying like really conscious of where you are and just having really good market awareness has been helping these 1 DTEs out. But yeah, with the VIX just being low, I found that just one night of risk is totally cool. And you know what would be really nice is if you're actually able to pull like a call credit spread, roll it down for 60 cents, right? And you could continue to chase the market. That was something I thought about doing earlier. I just, with how quick it fell, I was looking for some put credits and we just kept selling at every single level that we had hit. So never did end up adding a put credit, but overall we've been doing good. And if we take a look at even the last few days as well, the first swing trade we took was this 40.50 on the 40 for 40 cents. Back on the 12th, that worked out and expired. We had this one for 50 cents here from 40.40 to 40.45. And we've just been continuing to chop at that 4,000 level over the last few days. So we haven't even had to think about any of these trades, which is nice. Like generally we have some stress with them, right? Like that's just the part of short-term duration trades. If you sold a put credit spread this morning and then this happens, like that's just a painful and stressful time. So that was one thing we were just a little bit more cautious about, was where we were overall. You know, the market really looked like it was weakening. And, you know, once you get extended, right, just in general, and just looking at the other charts that I've been using, those are just times when you want to just continue to be patient and cautious and really size properly, because that's my whole thesis, right? Is, you know, trading's a difficult thing, and to make it easier on yourself, it's always in your best interest to size properly so that you're not panicking or having to figure out how to control your emotions, when if you had them figured out beforehand, you would have been able to make a better decision. So that's one of the other things. But that's why, you know, with just a short-term week, and we're actually getting more credit than we usually do on the 0 DTEs, which is nice. And just having that overnight move just really take a lot of the premium out. So, you know, 60 cents on that one, 50 cents on that one, and then 40 cents from this one, and then letting them all expire, right? Because we don't feel the need to take the risk off when you're, look at this, at this point, we're over 100 points out of the money. So like, there's really no point to take this off with a few hours left of the trading day. The chances we were to rally all the way back up would be pretty amazing for me to get tested at this point. But it's just having that situational market awareness on this one. But like I said, I'm not done with the 0 DTEs. It's just been a nice little pivot as the market is on a short duration week, right? And all the other 0 DTEs did pretty well. You know, we had a really nice week last week where we did have on the 13th, which kind of sucked, like, and even on the 11th, we had those days where it was like the market just, the VIX was so low that it would just slowly go against us, and the premium just wasn't coming out. So we ended up closing quite a bit of them, but we did have some decent ones, you know. But as the 0 DTEs start to struggle a bit more, that's when I start to become more conscious about, okay, if our thesis and setups are really good and everything is set up really nicely, but we aren't able to capitalize on it very quickly, there's something going on. And with the VIX being lower, it makes that a little bit more difficult. And I don't mind taking overnight risk in this environment because the VIX isn't high. So it's not like you're going to be getting absolutely steamrolled just overnight, of course, compared to like a 0 DT, right? Where it's just today, for example, like just all the selling is intraday. So that's one thing too, is I don't mind having that risk on overnight with a low VIX, because if the VIX was higher, right, just in general, we're going to be seeing those wild swings where you're like, wow, the market's up 2% when I woke up and I call credits, or vice versa. But that's really not what should happen when it's low. And the VIX will begin to expand if we're going to leg down, which makes it easier, because even if we are legging down, but you're continuously selling put credits, but getting out in the right amount of time, right? And that's one thing about being aware of. You can pick a 5 days out trade because you feel better because time's on your side. But my goal in a bear market is to reduce my risk as much as possible. And time risk is a big one because you don't want to always be sitting in trades, especially if you're losing a lot too. So it's just having that situational awareness. But that's why I've been doing 1DTs a little bit more. And like I said, we just aren't getting as great fills. And like even with 2x EM highs and a lot of resistance, like the market still can run to those levels because you're going to see these bears having to cover every day now that SPX is a thing, right? That you can trade 0DT on them. And 0DT is like the highest interest it has ever been at. So that's another thing too. Maybe the market makers start messing with the 0DT a little bit more, but that just sets up a nice way to pivot out of that. And I've been trading 1DTs for years. So it's not like this is something brand new, but not saying the 0DTs aren't working. I think they're still working phenomenally if you know how to play them. Like today, like we rolled down into the same day expiration and got more credit. But that was the other thing. It's like you got to be able to pivot and do the best trading when it's called upon, because you want to be as smart as possible when you're making these decisions. But that's going to be everything for me in this video. Hope you guys learned something. And just going back over the checklist was, sizing, timing, choosing the strikes, the risk management with rolling. I go over in a lot of the other videos, but yeah, just being smart and aware of where the market is, because there's a decent amount of people that can get trapped in these moves. And it's just, how do you minimize that yourself, right? And still come out on top and doing well. So that's going to be everything for me in this video. I do appreciate all the support and love from you guys as always. And I will see you guys in the next video.